Okay, gang, Apex Trades here, ready to get things kicked off. Straight into it as we go. So, this one is part of the educational series. We want to talk about exponential moving averages and why they're important, why we should use them, why they can help figure out way to enter into a trade, way to get out of a trade. Firstly, what is an exponential moving average? Well, an average by nature is just the average of a number of data points. And right now we're looking at the BTC chart, and the data points we've got are essentially candles. Right now we're looking at the 15-minute. Let's scoot over to the hour. And as we look at the data sets, each one of these candles is an hour. So an hour of trading on the hour before it goes to the next candle. So an average is essentially, we've got some averages set up here, and we'll talk about how you set these up in a short while. But right now we're looking at the 9 EMA. If I just show that on the screen, just to get started, you'll notice the smoothing of this EMA. And when you're looking at a 9 data point EMA, you're looking at the previous 9 candles and what the average close is. So, if you take the 9 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, if you look at this candle here, let me just get my tool out here. If you look at this candle, that close, let me just go back. I don't want to delete that. The close of this candle was here at the top. The close of this red candle was at the bottom. Close of the next candle was here. Close of this candle was here. Close of this candle was here, and so on and so forth. So what it's doing is it's taking the price or whatever the close of the body was at that point and calculating that across the last 9 candles. So that data point here where this actually finishes is the average value of the last 9 candles wherever those candles closed. So what the average does is effectively smooths out the pattern of the candles, so kind of where we are. And traders, whether it's math psychology or whether it's something else, I've always thought of technical analysis as herd mentality. If more people are doing the same thing, chances are, because you've got to expect everyone's trading, and everyone is, if you're using technical analysis, everyone's looking to use the same kind of edge to figure out which way the market's going to go. So oftentimes that's what will happen. Let's just shoot to the 4 hour. We're going to start with the 9 EMA, and just look at how could we use it to trade. And the way I like to use it is, let's take this area here, right? So if I look at this candle here, this is the 4 hour, by the way, so these are big moves. If I look at this candle, what I'm essentially looking for is wherever you are in terms of here, price action is always trying to revert back to the mean being the average. We're not really interested in these zones because these zones are not really fun to trade. It's difficult to make money in, so we're not really focusing too much on where we're sticking and hugging these. It's different here. I'll explain that in a second. But when we are kind of in this up and down choppy, where the body and wicks are kind of in and out, don't really want to play in this game. We're looking for these kind of exponential moves that really break through to the downside. And how can we trade this? Well, maybe you're not going to hit this candle. Maybe you're good enough and you can. More often than not, you're not going to hit that. But what you can do is you can say, okay, well, we've had good volume, at least in looking at the previous volume. It's not great, at least if you look at this, but it's bigger than the volume we've seen in the past a few days prior to that. But we've broken through the 9 EMA. Okay, so now we say, okay, well, has the body closed below that 9 EMA? Yes, it has. So then you can say, okay, well, let's get an entrance. Let's get an entry to the downside, and then we say, okay, well, that will be a short, and here's your entry. Then what you're looking for is the next point at which the body closes back above the 9 EMA, and it's this candle here. So we might have just missed it there, but this is the first point at which it goes above and sticks to. So your next candle, you're out. So where would that be? That would be just about there. Where would your stop be? Your stop could be relatively low. You don't really need to have too much of a stop, because you've got continuation to the downside. If you are stopped out, very small ratio, and you're happy to take that loss. And that was a risk to reward ratio 5.1. It was a 4.6% move and a nearly 1,000 basis point move. So that would have been an ideal one. What about to the upside? Well, okay, let's look at the long. We've got one here. We'll just miss that one for a second. Okay, so we've broken through here. We've got an entry. Our stop in this instance can be below where the breakthrough occurred. And then what are we looking for? The first body close. It's here, isn't it? That body just closed there on this candle. What would that have been? Just on a move, 694 points. Sorry, so no, my bad. That's not correct at all. That's a 1,614 point move. So nice move that would have been. That's a risk to reward ratio of just 2.46, but you're giving yourself some breathing room on that one. And we've got another one here on a short. Body candle closed. So there's our entry. Stop loss just above the order block. Order block being this consolidation here. And then where was our first body close? Came in here. You could theoretically look at the wick, but wicks are sometimes not perfect. So realistically, you want to wait for the body close to go above your EMA. So that would have been here. Still a 409 point move. Not bad. Then you've got this kind of noise. This is not like to trade in this. This is where it's hugging the touch line. So you're looking for volume. This one would have been a bit of a fake out. This one probably would have caught us out. So broke through the wick, but we don't close until we get back down here. So that would have failed. But your stop loss would have been somewhere here, just below that candle. So wouldn't have been a big loss. None of this would have given us any reason to trade because it's too choppy. But you can see where breakouts start to occur because it starts to bounce rather than kind of being in and out. It's bouncing, and then we break through, and then we bounce here. But this would have been one. So body candle closed here. This is a long. So we would have got in here, and our first close was this candle here. So we would have been there. Where would our stop have been? Just below the congestion. 792 point move. Risk to reward ratio of 2 to 3. And you can keep going, on and on and on. There's another one. That would have been a small win, but you're in here and you're out here. Don't need to keep on doing these. So we're on 4 hour. This is the 9 point moving average, and some of these wins would have been pretty good. That would have probably been a loss. In fact, let's just draw it for the sake of it. So we would have wanted a long. This would have been a long position. We would have got in here at this because this is our breakthrough. And when did we get out? We got out. Actually, it wouldn't have been a loss. Well, yeah. Theoretically, it would because we'd have waited for this candle to close. So that would, yeah, we had to. Well, actually, so the stop is here, just below the congestion. I'm just looking at this zone here. We would have been stopped out because we wicked here. That would have been a loss, but you're probably still in profit from this one. Definitely would have been a profit here. You'd have been in profit here also because no, you wouldn't. This would have been a loss because you would have broke through here. Having said that, this one might have been a nice one. So what would this one look like? So if this is a short position, where would they have got in? Here. We've had our stop just above the congestion. But our profit wouldn't have been tagged until here, so that would have been a loss. Small 207 point loss. So, these aren't perfect, but they're just on the balance of play. There's definitely more wins than losses. This is why if you keep your losses short, into the kind of just above the consolidation zones or the order blocks, you are probably going to be more in profit than in a loss. Keep your leverage tight. Doesn't really matter anyway because obviously you're on a stop loss. But if you're trading with too high leverage, then your account size on losses is going to be, just as bad. Okay, that's the 9. Just tidy these up. I'm going to shift over to. Let's drop this one off. Actually, let me just show you how to add an EMA. So, indicator panel, EMA. We're going to cover EMA ribbons in a separate video. What exponential moving averages? Just click that. I think it will default to 9. Next one is a 21-day moving average. So same as before, only we're not using 9 candles, we're using 21 candles. You'll notice this. The EMA is a lot smoother because there's more calculated points. But the same applies. If we take the same tactic, let's look at some longs. Here's our candle body close. Let me just zoom in a little tiny bit. That's so easily done. Here's our candle body close just above. Got in here. Stop loss just below the congestion. And here's our candle here. Closed. There. Very nice target. Yeah, you could argue that you missed all of this. Fair point. But if you're just playing the strategy like this, you'd still be in a nice risk to reward ratio of 3.7 and a 7.6% move with a 1,472 point profit. Right after that, either got in here on a short, probably looking, yeah, maybe just above the consolidation zone here. You may, if you want to be a little bit less risky, you can maybe look at this consolidation zone. And then where do we get out? First candle was here. That stopped just above. That would have been your take profit. 762 point move. Still nice. Next one was another short. You'd have had a loss on this one though, wouldn't you? That, you'd have kept the, so your stop would have been about here, just above the consolidation zone of this area. So this one would have been a loss, but this one would have been a win right after it. So this would have stopped us. So you'd have got in here again. Stop would have been just over your consolidation zone, and your first closed candle was this one. You can just see how powerful these are when you look at just using the EMAs alone, just to look for signals. This is another 755 point win. So these are all wins just playing this strategy alone. These are bigger wins than the. Here's the thing: these are bigger wins than the 9 EMA, but you can also get bigger losses as well. Okay, so let's look at the 30. How to be fair to the 30, and these can be applied, by the way, to all time zones. I'm just on the 4 hour now, but you can do all different time frames. This is 200. Let's make that 30. Okay. So starting with this one, I don't need to do this again. You can see it's very similar. Now we missed. If you remember, the 21 was. Let's just bring the 21 in. On the 21, you can clearly see we would have got an entry here, but on the 30, it clears that noise out a little bit, and that would have missed it. So you got to, you got to look at what's being respected. So what's next? So on the 30, let's go a bit further back. This would have been a nice move. Which one was this? This is our short. Would have got stopped out on that one, but we'd got in here. We would have set our stop just above the consolidation zone. So we wouldn't have got wicked out on that one. First close was here. Just looking at that candle. It's nearly 1,000 point move. That was a good one. Clearly I'm cherry picking these here. There's certainly going to be some losses as well. But even this one, right? Let's just say you shorted this one because the body of the candle closed here. I'm missing out a lot of this noise. I mean, really, when you're seeing these close congestion, it's easy because you don't know. I mean, this could easily break down and go down that way, so you just don't know. It's easy in hindsight looking at all this congestion saying, yeah, this is a congested area, but you don't know that this is going to be a congested area if you're looking at this candle and you haven't got the foresight of seeing what's coming next. So, you're always looking at just what the next candle might be. But again, if we take even this one in this congested area, so this would have been our short entry. We'd have been just above the consolidation zone. So, pretty safe. Having said that, our first body close was here on this one. But what you may want to do to tailor your strategy is, maybe just suggest, well, if I'm not stopped out, I'll let it run until we get a major break. and the first major break would have been here. And you may not even want to look at using the EMA to take profit, but more have a risk to reward ratio of say a 3-to-1. And let's say your 3-to-1 ratio's there. Well, you take profits here. You 100% take profit. Therefore, you are in a win. So it depends on how you want to play it. I mean, this would have been well, it wouldn't have been a great one actually because the first candle was here. But a risk to reward ratio of 3-to-1 here probably is somewhere in this area. If you don't want to use the EMA as a close, equally, what you can also do is maybe use. Let me see. You could theoretically use the 9. So you could use the 30 for entry and use the 9 to exit. And this would have been where you exited here. So if you took a long position, you'd have got in here and you would have got out just there, where this just closed and your stop would have been just below this consolidation. Massive move, 8% move, 1,727 basis points. That's a lot. You can use, this is how you can decide on how to play these games. It's easy again, hindsight's great, but you can use maybe to clear out the noise, you can use the 21 day or the 9 day the 30 day moving average to get in and to take, if it's an explosive move like this, rather than wait for this big rejection candle, which is probably a vector candle. Maybe just use the 9 to get out when you touch that body, when the body closes below that candle. So that's pretty much it on the EMAs. This is a strategy that you can look to implement just as a single strategy. Clearly, it can be successful if you can let them play out. The other one I just wanted to talk about was the 50 day. So let me just hide. I don't know. Let's hide that one. And let's just make this the 50 day. So that's the 50 day. So you can see complete, big long sweeper motion. And, this would have been a nice place to enter. But look at this for the move. So, but this is a great move here. So, let's say we got in here, waiting for our first candle, looking for our first candle close. And our first candle close was here. So what would that have looked like on the 50 day? This is going to be a monumental one. So short position. Our first close was here. If we're playing this game on this, and our stop is depending on how risky verse want to get, but I'd probably say, forgetting about these peaks here, we can sort the order blockers here around this consolidation. Yeah, so you're looking somewhere around here, maybe just for your stop. Maybe if you want to be a bit more risk averse, you're just covering this last little peak. And where's our first close? This is our first 50 EMA close. These are big long swing and moves. So this is if you're swing trading, this is like the 16th of August. And this candle was our first stop out on the 9th of September. However, what would that look like if we go to here? 5-to-1 ratio, but a really big move. 4,043 point move. That would have been beautiful. As I say, I'd say it's a wonderful thing, but just looking at how these strategies can be traded, there's certainly something to look at, as to how this can be viewed and mixing and matching these. But that move would have been fantastic. 5-1 ratio. Again, just giving yourself a little bit of room to breathe, being happy. Yeah. So if you are trading with relatively low leverage, like a 10x, then realistically you should be okay because you get about a 2,000 point um, relief, let's just say, with that. So I think that's pretty much all I wanted to talk about on EMAs. They are just to kind of blend out the noise a little bit, try to make the picture a bit clearer. But I hope you got something from this. Appreciate it if you'd like. Maybe subscribe, throw some comments. Let me know how you use them. Is there anything different to the way you fellas use them, or ladies? And I think I'll see you in the next one. Speak to you soon.